To refinance or not to refinance? That's the question. In this video, we're going to learn about 1. What is a home refinance? 2. The rate and the terms of home refinance. 3. The cash-out refinance. 4. The cost of a home refinance. 5. The no-cost home refinance. 1. What is a home refinance? When you refinance your mortgage, your bank or lender pays off your old mortgage with the new one. This is the reason for the term refinancing. Most borrowers choose to refinance so they can lower their interest and shorten their payment term, or to take advantage of turning some of the equity they have earned on their home into cash. There are 2 types of refinance: the rate and the terms refinance, and the cash-out refinance. Number 2. Rate and term refinance. In a rate and term refinance, you would typically be getting a new mortgage with a smaller interest rate, as well as a possibly shorter payment term, 30-year changed to 15-year term. With the recent record low interest rates, refinancing your 30-year mortgage into a 15-year mortgage may end up getting you similar monthly payments as your original loan. This is because of the lower amount of interest you would be paying on your new mortgage, even though 15-year mortgage payments are usually higher than the 30-year loans. The Truth About Mortgage states that it's important to be sure you find your break-even point before deciding to refinance your current mortgage rate. This is essentially when the refinancing costs are recouped via the lower monthly mortgage payment. Number 3. Cash-out refinance. In a cash-out refinance, you can refinance up to 80% of your current value of your home for cash. Thus, why it is called a cash-out refinance. So, say your home is valued at $100,000 and you owe $60,000 on your loan. Your bank or lender can give you, as a qualified borrower, $20,000 in cash out, making your new mortgage to be $80,000. In a cash-out refinance, you are not always saving money by refinancing, but instead getting a form of lower interest loan on some needed cash. Reasons for taking out a cash-out refinance could be that you may want to dig a new pool for your backyard retreat or go on your dream vacation. Be aware, with taking out a cash-out mortgage, there is an increase in the amount of your lien. This could mean larger and/or longer-term payments. Remember that this is not free money and that you must pay it back to your lender. Deciding to refinance your mortgage is not something to be taken lightly. Always consider the cost of the refinance versus the savings in return. Talk to a financial planner if you are worried about whether or not to refinance, along with other options available to you. Number 4. The cost of a home refinance. To refinance your home loan, you will need to find a lender. Finding the right lender is likely to be time well spent, as it can get you money back. The cost to refinance a mortgage can range from 2% to 6% of your loan amount, depending on several factors including the size of your loan, your lender, your location, your credit score, your available home equity, mortgage term, mortgage type. 5. The no-cost home refinance. While searching for mortgage lenders, you may have encountered the intriguing term no closing cost refinance mortgage, also known as a zero closing cost refinance. In this article, we'll explain the meaning of a no closing cost refinance mortgage and give you the tools to decide if it's right for you. But before explaining the purpose of a no closing cost mortgage, we first have to understand the concept of closing costs. Pros. The benefit of refinance no closing cost is that it can spare you a ton of money in upfront fees. A no closing cost mortgage makes some or all of those fees vanish upfront. Cons. The downside of a no closing cost refinance mortgage is that it doesn't actually save you from having to pay the fees. You'll still have to pay them off with added interest. The higher the closing fees and the longer your repayment term, the more you'll end up paying to the lender in the long run for a no closing cost mortgage. A no closing cost refinance mortgage is a bonus option offered by lenders that empowers you to customize your mortgage to suit your borrowing ability. As with all aspects of your loan, assess the numbers for yourself to decide whether the benefits of a no closing cost mortgage outweighs the costs. The takeaway: before you refinance your home loan, consider how much you'll have to pay in closing costs and compare that with how much the refinance could save you over time. After you do that, if you decide to refinance, go and shop for the best refinance companies and choose the lender that fits your needs.